Here's what everyone gets wrong about Pi Network. Why one crypto expert is doubling down while others flee. While the cryptocurrency community remains deeply divided over Pi Network's legitimacy, one prominent digital asset analyst is making a move that has left many scratching their heads. Dr. Altcoin, a well-known figure in cryptocurrency analysis, has just announced his intention to dramatically expand his Pi holdings to an eye-watering 150,000 coins over the coming years. But here's where it gets controversial. This bold accumulation strategy comes at a time when Pi Network faces mounting skepticism, exchange delistings, and persistent fraud allegations that have sent its price tumbling. So what does Dr. Altcoin see that the rest of the market is missing? And more importantly, is he making the investment decision of a lifetime or walking straight into a financial disaster? The contrarian bet that has everyone talking, Dr. Altcoin's recent declaration on social media, sent shockwaves through the crypto community. In his own words, he currently maintains a growing portfolio of Pi tokens with an ambitious goal of reaching between 100,000 and 150,000 coins within the next 24 to 36 months. This aggressive accumulation forms the cornerstone of what he calls his 5-year strategic holding approach. What makes this announcement particularly striking is the timing. While retail investors are abandoning Pi en masse following recent market turbulence, Dr. Altcoin is swimming against the current with unwavering determination. His reasoning? The analyst believes Pi Network's authentic worth will eventually surface through expanding ecosystem development and increasing worldwide acceptance. But here's the part most people miss. He's prepared to lose everything. I've calculated the risks involved, but my confidence in this project's future trajectory is so absolute that I'm willing to accept complete portfolio loss on Pi, Dr. Altcoin stated in his recent social media post. This level of conviction raises an uncomfortable question. Is this the mark of a visionary investor, or someone who's fallen victim to confirmation bias? The failure narrative everyone's talking about. Critics haven't been shy about voicing their concerns. Speculation surrounding Pi Network's potential collapse has intensified following recent price corrections and exchange difficulties. The project has faced a barrage of challenges, from regulatory scrutiny to persistent questions about its long-term viability. Yet Dr. Altcoin remains unshaken in his assessment. His counter-argument is surprisingly simple, but potentially powerful. Had Pi Network been destined for failure, that failure would have materialized well before its open network deployment. I haven't encountered another cryptocurrency initiative that invested 6 years in development while maintaining community enthusiasm and momentum. This perspective highlights a crucial point that many investors overlook: the sheer persistence and longevity of the Pi Network project. While countless crypto ventures have launched with fanfare, only to disappear within months, Pi has sustained development efforts and user engagement for over half a decade. But critics argue that longevity doesn't guarantee success, and some question whether Pi's extended development timeline actually signals underlying problems rather than strength. The technology developments everyone's ignoring, and this is the part most people miss. While headlines focus on price movements and controversy, Pi Network has been quietly building significant infrastructure improvements that could fundamentally change its trajectory. The network recently implemented comprehensive Know Your Business (KYB) protocols specifically designed for centralized exchanges. This development addresses 3 critical challenges simultaneously: enhanced regulatory compliance, reduced speculative trading activity, and increased focus on practical, real-world applications. Additionally, Pi has developed proprietary Know Your Customer verification systems engineered to authenticate the identities of network participants, known as pioneers. This dual-layer verification approach demonstrates Pi's commitment to regulatory compliance while ensuring genuine user participation across its global ecosystem. Perhaps most significantly, June 2025 witnessed the launch of Pi App Studio, an artificial intelligence-powered, no-code development platform that enables users to create both blockchain and AI-based applications without traditional programming knowledge. These technological advances suggest Pi Network is positioning itself for substantial growth rather than preparing for failure. However, skeptics argue that technology alone doesn't guarantee market success, especially in the volatile cryptocurrency sector. The real story behind Pi's price struggles, Pi's recent price decline, stems from a combination of exchange delistings and persistent fraud allegations that have created significant market uncertainty. However, the ecosystem's continued expansion through initiatives like App Studio and enhanced KYB compliance protocols reveals long-term potential that extends far beyond short-term market volatility. The AI-powered Application Studio represents a particularly intriguing development, allowing users to build blockchain and artificial intelligence applications without coding expertise. This accessibility could drive user adoption and practical utility, two fundamental factors that Dr. Altcoin considers essential to his accumulation strategy, targeting over 100,000 coins. Despite ongoing allegations, Pi's stringent KYC and KYB enforcement measures, combined with continued technological development like App Studio, directly challenge fraud claims and align with legitimate blockchain growth strategies focused on compliance and utility. But here's where it gets controversial again. Is Pi Network's regulatory focus a sign of legitimate business development or an elaborate attempt to appear legitimate while lacking substance? The million-dollar question that divides the community. The Pi Network situation presents a fascinating case study in cryptocurrency investment psychology and market dynamics. On one hand, you have a project with sustained development efforts, growing technological capabilities, and strong regulatory compliance measures. On the other hand, you have persistent market skepticism, price volatility, and questions about real-world adoption. Dr. Altcoin's aggressive accumulation strategy represents more than just an investment decision. It's a public statement of faith in Pi Network's long-term viability that runs directly counter to prevailing market sentiment. This creates an intriguing dynamic. Either Dr. Altcoin has identified value that the broader market hasn't recognized, or he's making a spectacular miscalculation that will serve as a cautionary tale for future crypto investors. What this means for your investment strategy. The Pi Network controversy highlights broader questions about cryptocurrency investment methodology and the challenges of evaluating projects with extended development timelines. Traditional metrics like price performance and exchange listings may not capture the full picture of a project's long-term potential. For beginners in the cryptocurrency space, this situation illustrates the importance of conducting thorough research beyond surface-level market movements. Understanding technological development, regulatory compliance efforts, and ecosystem growth can provide insights that pure price analysis might miss. However, it's equally important to recognize that technological progress doesn't guarantee investment success, and even experienced analysts can make significant miscalculations. The uncomfortable truth about Pi's future. As Pi Network continues its journey through market turbulence and technological development, one thing remains clear. This project defies easy categorization. It's neither an obvious success story nor a clear failure, existing instead in the uncertain middle ground where many innovative technologies find themselves during development phases. Dr. Altcoin's bold accumulation strategy serves as a high-profile test of conviction versus market sentiment. His willingness to risk substantial losses demonstrates either exceptional confidence in his analysis or concerning overconfidence that could lead to significant financial consequences. The outcome of this investment approach will likely influence how future cryptocurrency analysts and investors evaluate projects with similar characteristics. Extended development timelines, regulatory focus, and technological ambition combined with market skepticism. Now here's where I want to hear from you. Do you think Dr. Altcoin is making a brilliant contrarian play that will pay off handsomely? Or is he falling victim to the sunk cost fallacy and confirmation bias? Have you encountered similar situations in your investment experience where technical development contradicted market sentiment? More importantly, how do you evaluate cryptocurrency projects that show strong technological progress but struggle with market acceptance? Should investors prioritize short-term market performance or long-term technological potential when these factors conflict? I'm genuinely curious about your perspective on this. Are you team Dr. Altcoin, believing that patience and conviction will be rewarded, or do you think he's ignoring obvious warning signs that suggest Pi Network's best days are behind it? Drop your thoughts in the comments, especially if you disagree with the analysis presented here. Sometimes the most heated debates lead to the most valuable insights. Remember, this analysis is intended for educational purposes and should not be considered financial advice. Cryptocurrency investments carry substantial risks, and you should always conduct your own research and only invest funds you can afford to lose completely.